Good morning, good morning, good morning, everyone. How is everyone doing today? Just need to make a little, let's see, just a little, got the blurriness hopefully fixed. Let's see, just making a couple minor adjustments here. There we go. How is everyone doing? Let's see, Sterling won't be in this morning, so we won't have him putting in the news or the numbers, but we have slightly cooler CPI X numbers hitting. Let's me first say good morning, John. Good morning, Patrick. Good morning, Anissa. Hello, Charles. Where's everybody this morning? There are people here, but they're not in the chat. Where is everybody? Are you so shocked by the CPI numbers? We have double bottom patterns confirmed. So let's see what happens. Let's see what happens. These are stronger ones than yesterday's. Yesterday was 1 hour. These are 4 hour double bottom patterns. So maybe these will hold. We're still in massively oversold conditions, watching for that bounce. Good morning, Jacob. All right. The big thing this morning was the month-over-month core inflation rate coming in 0.2 versus 0.3. Year over year coming in 3.1 versus 3.2, down from 3.3 earlier. So again, the market's celebrating that inflation is obviously going away. That's right by that 3.1 is right by that 2 number, isn't it? That 2.0 inflation rate coming in the headline number 0.2 versus 0.3 expected, which if you analyze that, that's still 2.4, nowhere near their 2, but closer to where we are now at 2.8 year over year. So that's where we sit. Otherwise, today we just have EIA numbers. You won't hear anything from Feds also because they're in their quiet period. So that's where we sit right now. Good morning, PMG. The clock change got you, huh, Charles? Good morning, Chris. So let's see. Did I say good morning to Jacob? Well, if not, you get a second. If I did, you get a second one. So CPI numbers. Those were big. Tomorrow we got the PPI, and then Friday, remember, we have consumer sentiment. Let's see if it can keep the market going. Pretty much green across the board, especially with the mega caps. Everything in oversold conditions. Buy everything again. Can it sustain into the close? In terms of this, the only thing negative is healthcare and consumer defensive. So obviously a very risk-on day, pouring into riskier assets and things that have been beaten up. Fed Watch still has pause, and then a cut in June, cut in September, and a cut in December. So through 3 cuts priced in after this data. Fear and greed still an extreme fear. The Shiller PE is finally back below 35, but nowhere near cheap. But cheap enough for people to want to buy a bounce. So today, after the close, we have nothing really this morning, unless you're into robot vacuum cleaners. We have Adobe. That's probably the biggest name today, and then tomorrow morning before the open, which will be interesting. It won't be market moving, but it will be interesting as Dollar General. All right, so let's get to the key patterns. So this set up a 4-hour double bottom that has now been confirmed. Really pay attention to this because the 4-hour rotation zone would be out of the way if this does trigger a little higher. The technical trigger is a close above 56, 51, 75, which we still need 52 minutes from now for it to close. And then the targets are 56.98, so roughly 5,700, 57.22, 57.45.50. So that's where we sit. Also, pay attention to yesterday's high. And this is very interesting because roughly the double is nearly at that is at that same point, which is a percent B buy if we follow through with a close above yesterday's high. So again, and you see where that first and second target are well within the rotation zone. So can this sustain a bounce up to at least those first and second targets and follow through with a percent B buy? We'll have to see, but that's where it sits now. And we had a pretty significant divergence down here on the RSI coming out of very oversold conditions. If it does not hold, because we have to prepare for both things, still the invalidation point for the double would be a close below 55.7825 or a trade down through 55.6350. what levels I'd be watching, that's the technical invalidation point for the double. What I'd be watching on any pullback is right about 5604. 5600 to 5604 is key support if we do drift down. Other than that, the level in front of it I'd look for is about 5620 to 5622. So that's where that sits right now. The NASDAQ, let me see who else is here for help. Daniel. Good morning, Royal Palms. Any advice on holding trades for whole intraday, entering Asia session and holding until close? Like, for example, on the NASDAQ today. Any advice on holding trades to hold? I don't know what you mean by holding. You hold the trade until it either hits the target or gets stopped. I entered in Asia, but instead of holding and letting it work, I find myself just entering multiple times on pullbacks. Well, again, if the big pullbacks don't bother me unless it invalidates the trade and hits my stop. You have to be okay with the P&L swings. All right. Do the pullbacks invalidate the reason for the trade? Because what I think you might be doing is over trading and trying to catch every swing, which and then you're going to end up missing things and or taking on more risk than you need to by just sitting through these swings. Good morning, Eric. The NASDAQ also confirmed earlier. That confirmed yesterday afternoon, and now looks easily like this one's going to trigger the double bottom here. We have the targets approaching 19,820, then about 19,930, then 20,027. Let's see how that plays out. Also, yesterday's high, this trigger point was before, but keep an eye, yesterday's high is still important for a percent beat buy. And the final target on that double is the 200. Since we're virtually nearly to the target, first target, the invalidation at this point would be a close back below about 19,382 or a trade back down 19,300, 19,301. Now, going into the open on any pullback, very key support is 19,545 to 19,550. All right, that's where we sit right there. The Dow, which did not have any double bottom. No double bottom here, coming up to the rotation zone and dropping back down. The key support level in the Dow so far is between 41,622 and 41,521. Do we have a percent beat buy? Yes, it's above yesterday's high, which is still a long way off, but that is technically, if it trades through 42,128 and then closes above it, it's a percent beat buy for a bounce play only. The Russell confirming yesterday, spiking up with the CPI numbers and getting sold very, very heavily back down. So, again, for it to officially trigger, it still has to be about 46.6 on a closing basis, but I do not like these patterns that spike up and then move all the way back down because it lowers the probabilities. But if you're trying to trade this intraday, 20,068, 20,078, 20,089. Also, potential percent beat buy if it closes above yesterday's high, but this already slammed into the daily rotation zone. So this is a much lower probability setup than the other ones. Yeah, you got to get off eventually off that 5-minute chart. It'll drive you crazy. There's only one time I really look. It's generally during Fed meetings or some other big announcement. That's it. Other than that, it's what's my favorite chart is the 4-hour and the daily and the weekly. You know, if I have to drop down, I still prefer the 1 hour over anything else, unless you're trying to fine tune an entry. But the entries are strongest, the setups are strongest on the 4 hours and the dailies, and then you can always drop down in time frame. That just means you use smaller positions and wider stops. That's what you do. VIX starting to drop back down. Really pay attention. If this continues to drop down, I'm watching Monday's opening print area around this 2470. So that's where I'm watching for it to come in with some key support. But if we continue to drop, I'll watch for the sustained rally. at least out of this oversold condition. The DAX finally closing below the rotation zone, now watching for more of a consolidation on any bounce. So on any bounce now, this is setting up a bigger potential topping pattern. We might be getting a head and shoulders pattern in here, but very key on this bounce is 22,920 area to 23,067. Notes, the note futures dropping after the CPI report, and the yields, we still have the potential double top in the note futures and the potential double bottom in the yields. So even though the CPI came in a little more dovish, yields are rising off of that. Still, the close above 4.342 triggers a little mini potential double bottom on the micro yields. Dollar index. If it were to rally and close above yesterday's high, it is percent beat buy. There is no other major pattern here. This would be this. Let me see here. Oh boy. Yeah, see, that's just ugly. There's not even a really good pattern to trade off of there. So the only thing is the percent beat buy potential setup. Crude, we do have a daily potential double bottom against very, very key support as we talked about yesterday. Going to be watching to see if this manages to hold its close above 67.12 today. Again, these are against the rotation zone and may never trigger. Remember, in the rotation zone, when you're trading against the rotation zone, it does drop the percentage points by a few points. Gold, not much to talk about. Snapback rally still has not broken out the other side yet, so we're still in consolidation. Still paying attention to see if gold breaks above 2,930. Yen, this also is coming up to the rotation zone. Was this a very strong bottoming pattern? No, there was just a very minor mini double. Going to be watching for this to make a stronger bottoming pattern and a little yen weakness bounce and a rotation back down before possibly setting up a stronger pattern. The yen has gone very far, very fast in this drop. So we could easily be setting up for a bounce, but there's no super strong pattern yet. Euro, nearly tagging the 75% harmonic, watching for some kind of little mini topping pattern in here, but there is not a great one yet. Spiders. So would also be a percent beat buy and a follow through close today above yesterday's high. Yesterday's high coming in at 564.02. On any rollover play, I'd be watching for the gap fill though. The gap fill, especially not to, first of all, the official gap fills to yesterday's close, which is 555.92. However, we're trading 562, 561.99 going in the open. So my first key support level would be yesterday's open at 559.40 on any pullback. You don't have to be a 500K a year trader, but you can also trade the micro futures. Trade the micros. That's because you can really get fine-tuned position size and keep a lot wider stops and trade on the bigger time frames. So that's what keeping an eye with this on the spiders. You can see that there was no, even going down to the 1 hour trade, there was no double setup just because of the shortened time frame compared to the futures. But if you're watching something today, keep an eye on that, again, that high 564.02. That's what's going to be key. The Qs, keep an eye also on yesterday's high, 478.81 for the follow through close above that. Again, on any rollover play would be first yesterday's open price of 472.35, then the close price of 471.60. But my net magnet trade, if this really takes off and takes out yesterday's high, which we're trading virtually right just below it, if that takes off, then I'm watching for Monday's open price of 483.45, and then we still have a gap fill beyond that. And this holds true even tomorrow on a follow through if it doesn't get there today, because that would take a massive rally. 491.79 to the gap fill on last Friday. Bitcoin also bouncing back to very key resistance into the rotation zone. So we're going to start watching if we get our setup rollover play on this on any weakness. The next target, if we did get through there, is closer back to about 87,500. So that's where that sits. Tesla gap up on this back to the target on here. Yesterday's high is still key. It's already through there. So it's probably going to still close above there for a percent B buy, but the major breakdown zone is still 265, 266 area, and there is still a gap fill back, potential gap fill back to 262, 67. So that would be the magnet price right around the declining rotation zone. All right. That's where we sit. That's where we sit right now. There's not much else to go over today. Not much else, so I'm just going to call it an early session. Again, really pay attention on these potential doubles to see if they trigger or not, because it has not been able to get traction. You already see a spike up in the rotation zone and dropping back down. So now these doubles are confirmed, so it might take a little bit of time to trigger, but if they do trigger and manage to run, that's the upside play out of oversold conditions from my perspective. With that, I will talk to everyone tomorrow for PPI. Hope everyone has a wonderful trading day. Bye for now.